What is the stock exchange and how does it work? Imagine a massive global marketplace, not for apples or gadgets, but for something far more valuable, securities. These are rights to assets, typically shares, or tiny pieces of ownership in companies. Every year, trillions of dollars flow through the stock markets, fueling economies and connecting investors with businesses. What's a share? Let's break it down. Think of a company as a pizza. A share represents one slice of that pizza. The bigger the pizza, the larger each slice. If a company like Amazon launches a game-changing product or service, it's like adding more dough, toppings, and cheese. The pizza grows, and so does the value of its slices. For example, if an Amazon share was worth $200 yesterday and grows to $250 today, a shareholder who sells it earns $50 profit per share. Great for the shareholder, but what about Amazon? Why do companies sell shares? When a company offers shares on the stock exchange, it's not just about creating wealth for investors. Selling shares raises money that companies can use to grow. For instance, a company might use these funds to develop new products, expand into new markets, or build cutting-edge technology. This allows businesses to scale faster and turn bold ideas into reality, benefiting both the company and its shareholders. Unlike your local market, the stock exchange trades virtual goods. Prices aren't determined by physical inspection but by numbers on screens. Share prices move up and down like a roller coaster, influenced by everything from company performance to the latest rumor. The gamble of trading. Trading shares can feel like a game of chance. If a company has a good reputation, investors flock to it, raising its share price. A poor reputation? Investors flee and the price drops. Sometimes hype or rumors drive the market, inflating share prices beyond the company's actual value. This can lead to speculative bubbles. Imagine a balloon filled with nothing but air. Eventually, it bursts and prices crash. But when handled wisely, the stock exchange isn't just a gamble, it's a powerful tool for growth. Stock market indices. Every stock exchange has its index, a snapshot of companies' performance. For example, the DAX represents Germany's 30 largest companies. The S&P 500 tracks 500 of the largest companies in the US, offering a broader view of the American economy. These indices work like thermometers, showing whether economies are heating up or cooling down. From the New York Stock Exchange to the Tokyo Stock Exchange, all these markets are interconnected, forming a giant global network. What happens in one corner of the world can ripple across the globe, impacting economies and investors everywhere. Why it matters to you. The stock exchange isn't just a playground for billionaires. It funds ideas, fuels innovation, and connects you to the companies shaping the future. Understanding how it works is the first step to becoming part of this incredible system. Ready to take your first slice of the pizza and start your financial journey? Let us know in the comments below. And don't forget to subscribe for more bite-sized lessons on finance. Served one sketch at a time, your future self will thank you.